The financial crisis of 2008 had never ended. Weakness has prevailed and a new era of worsening conditions has become the norm. Mainstream financial media reports the hilarious figures presented to us by the corporate-controlled government. High-frequency trading plays off of this silliness, sending the markets into a frenzy every second of every trading day. Reckless behavior will ultimately crash this system, sending citizens' hard-earned savings into the hands of the technocratic elite. You came here for the truth, so let me unveil that for you. Today, we have a few stories I want to get into, including the biggest drop in profits since 2009. Once again, another indicator showing us that this, in fact, is the financial crisis part 2. Let's get into it right away as we look at this. The job growth surged in October, rebounding from a late summer slowdown that raised concerns about whether global slowness was infecting the U.S. There's nothing to see here. All there is are good times and profits here in the U.S. Look at this. The headline unemployment rate declined to 5%. Can you believe it? We are at officially full employment according to the statistics. 5%. Everything is now fine. You have to realize that. If you're watching this video, this is a message to begin getting into the maximum amount of debt you possibly can. Go out there on a shopping spree because everything is fine. And as I've said before, everything is awesome. A broader measure of unemployment that includes those who have stopped looking as well as those who are working part-time for economic reasons declined to 9.8%, the first time it's been below 10% since May 2008. That's right, a reason to celebrate that the real unemployment rate, or even a fraction of that real unemployment rate, is at 9.8%. It's under 10%. Therefore, everything is awesome. Let's move on to this here as we look at the real, what I like to call the real unemployment. Labor force participation rate remains at a 38-year low. In fact, over 94 million people are not in the labor force. How does this work? Well, basically they drop off of those statistics. If they are unemployed for a particular amount of time, somehow, according to the statistics, they're no longer unemployed anymore. That's the fallacy that is played for all those who don't pay attention. Warren Buffett's Berkshire Hathaway recorded its best ever quarterly profit in the third quarter as earnings were boosted by a one-off $4.4 billion gain from the merger of Heinz and Kraft. What we are seeing here is the division in between the smaller companies and the bigger ones. You have the mega corporations who own and control the government, and then you have all the small business owners who are suffering. But it's not even the small business owners in many cases. You see the larger businesses that are suffering as well. But the elite of the elite are doing better than ever. And of course, Warren Buffett, Mr. Insider, is doing great. What about this insider? Oprah Winfrey. Weight Watchers continues to benefit from the Oprah effect. The stock surged again Friday morning after the diet company said Oprah Winfrey will soon appear in a Weight Watchers ad. So here we are looking at something frivolous as this, and any positive news is a reason for investors to quickly trade in and out of corporations. They're desperate. They're looking for places to park their money. This is one example of just a simple announcement causing such a frenzy. Weak trading volumes and so far disappointing earnings season have focused on a reliable dividends payout rather than in blockbuster growth have all contributed to the view that investors are being sucked up into the market updraft rather than enthusiastically betting on a cyclical upturn. So they're not investing based on actually thinking, look, everything's going to be fine now. They're just chasing the wave. And that's the way this works. You want to ride the wave up and not worry about the fundamentals. But this is a topsy-turvy world because you're supposed to be looking at all the fundamentals. That's what I've studied for so many years. But in looking closer at it, you realize that the fundamentals aren't really being put into this at all. It's not even a factor anymore. We can observe that the market continued to be really driven by what's going on with the central banks. If we just look at the fundamentals of the economy, it's very difficult to be very optimistic about equities. And right here, this is the head of research on one of these asset management companies saying exactly what I've been saying all these years. So, it's not just me saying this. What I wrote about in my book is what I wanted to point out. It's so crucial to understand this. Many people just will not get into this. Many people who may comment on the channel occasionally, they don't really understand the way I look at things. You may look at it differently, but this is the way I look at it at the Money GPS. Most people don't measure their money in relation to real goods. When you think about how much stuff a $1 purchases now, 10 years ago, 100 years ago, the difference is obvious and staggering. This goes for any other country around the world, some more so than others. Paper dollars are continuing to lose their value in relation to real goods. That's what's important. That's why I research. That's why I bring information to the public. Simply because we're losing the value of our dollars. We earn dollars, we earn a local currency, and then you take that, hopefully, and transfer that into real goods. Whether that's you have to buy food, whether that is you have to pay for services or what have you. But it's losing value rapidly. That's why it's so crucial not to keep the paper fiat garbage that they give to us. This is out of the AP showing you the reality, the real situation of this economy. Target closing 13 stores nationwide, citing falling profits. Target's closing these stores, 13 of them, and lower down, it was hurt by what they claim hurt by a massive credit card breach before Christmas of 2013. Now, this is one small example, but this is the way that it works. They use any excuse to say, look, we're having problems with this one particular outlet and not the other ones. But of course, they're hurting as well. I've been showing you that. They're trying to stop people from panicking. It's working pretty well overall. U.S. earnings losing steam. Here we go. Third quarter season set to post biggest drop in profits since 2009. Look at this trend that has been going on for now over a year, and you could see how profits are declining year or quarter over quarter, and this obviously won't be a continuing trend unless they can engage in QE4. If they do that, if they lower the interest rates, they'll be able to continue this scheme for a little while longer. I want to switch gears quickly into this as you see what happened in London really just recently here over the last few days. You could see a little bit of anarchy, a little bit of this chaos that will ultimately erupt in many of the major cities around the world. This is being called the Million Mask March, organized by Anonymous to hit back at austerity measures and perceived inequality brought about by the government. Now, what I would say, first of all, is that I don't condone any violence on the streets. But I will say that it is coming because people are not willing to take it anymore. Yes, there is a improper use of austerity. It hits people in the wrong way. You want to cut back on certain things, but you don't want to cut back and hurt the individuals. You want to cut back on all of the bailouts. You want to cut back on all the bail-ins. You don't want to cut back on people's bank accounts. That's not the way this works. And of course, there is major inequality. Just talking about individuals like Warren Buffett who got all the tax loopholes. They're allowed to keep their money overseas. But of course, you as the individual, you just get increased taxation every single year, other than a few blips along the way. We will definitely see more of this to come, and it is truly unfortunate. If you want it to stop, all we need to do is increase prosperity. If you found this video informative, please give me a thumbs up. I truly appreciate that very much. And last but not least, if you found the video informative, then you'll definitely find my book, The Money GPS, even more informative. If you head over to Amazon, they have this look inside feature, which allows you to flip through the pages of the book to see if you like it. Take care.